Hi, everyone. I'm super excited to be here. My name is Claudia, and I am the head of product at a startup called Close Factor. Prior to Close Factor, I led product at HighSpot as well, and before that, 5 Stars and a number of other companies. And one thing that all my experiences have in common is all of these companies had multiple successful up rounds from a fundraising perspective and also huge exits and huge valuation. And as I reflect on the last few years of my career, I started thinking about what do all of these experiences have in common? What do all of these companies have in common that allowed them to continue to be successful, sustainable businesses? And part of it is a scalable revenue engine. So I am going to talk about that today. 65 businesses fail in 10 years. And coincidentally, it takes 10 years for a business to go from inception to IPO. Sometimes there might be exits along the way, like acquisitions or mergers, but essentially, it takes 10 years right now, especially in this current market, to have some sort of a larger exit at a larger valuation. What are the characteristics that drive a successful company? Knowing that the odds aren't in our favor, knowing that most companies fail in a decade, what are the characteristics that actually make these companies successful, makes companies evergreen? When we take a look at this chart by Bessemer Venture Partners, we see that as companies scale, the successful companies, the ones that last longer, the ones that have sustainable practices, are ones that actually improve their margins over time. So if you start a business, the whole goal of getting your business up and running, of getting the initial fundraising round is get as much revenue as possible. Revenue at all costs, sell as much as possible, try out your customer, try to find product market fit. But beyond that, the businesses that last are the ones that are able to actually improve their margins over time, where they can do more with less, where the spread between their revenue and their costs continues to increase, where the cost remains a small percentage of the revenue that they are able to gain over time. And if anyone here has taken an economics course in the past, maybe the term economies of scale is ringing in your head. These companies, the ones that are actually able to improve their margins over time, are able to do so because they develop a scalable revenue engine. So what is a scalable revenue engine? I will break it down with a couple of examples, and hopefully by the end of this talk, everyone will feel comfortable for integrating your practice, your research practice, your product strategy to actually helping your company unlock a scalable revenue engine. But before that, let's start with a financial formula. How do we measure scalable revenue? From a financial perspective, scalable revenue is a ratio. It's the ratio of profit over the cost needed to manage that particular revenue stream. So if you think about it, a good business, like let's put our investor hat right now. If I were to ask you, would you rather invest in a business that can get as much revenue as possible in the next 10 years, but their costs increase linearly? Or would you rather invest in a business that gets good enough of revenue while mitigating their costs? Yes, of course it's the latter. I saw someone raise their hand for 2. It is absolutely the latter. And especially in this market, you may hear all the time, either on LinkedIn or anywhere else online, it's no longer about growth at all costs. Right now, it's really about the ability to grow your business efficiently and to unlock revenue streams that continue to mitigate costs. So this is just a basic formula of how to measure scalable revenue. Again, it's the ratio of profit to the new cost needed to actually manage that revenue. How well are you able to be a profitable company while minimizing your costs or mitigating your costs? And to break down that formula a little bit more, revenue essentially is company generating income. Scalable revenue and how that's different is being able to grow that revenue faster than costs. So if you're looking at this chart, essentially scalable revenue is this hockey stick increase where we continue to increase the multiple of our company, the worth, the value of our company while minimizing costs. And throughout my career, I've noticed from a research and product perspective that there are actually 4 signals that we can capture to drive scalable revenue in our companies. And if we pay attention to these 4 signals when we're conducting research, when we're exploring data, when we're building products, we can actually continue to drive a scalable revenue engine for our companies. So what are these 4 signals? The 4 signals are, number 1, tracking recurring usage. Number 2, discovering opportunities where the time to first task is actually very fast. Number 3 is unlocking growing behavioral clusters among our users. And number 4 is competitive arbitrage. I know these are a lot of different terminologies, but I promise you in the next few slides, I'll break them out in more detail. So let's start with recurring usage. I'm bringing up examples from different companies in the past, so bear with me and I'll try to describe the companies and the examples to ground everyone in the exact use case. In this company, I worked at 5 Stars about 2 jobs ago, and what 5 Stars did was we were originally a loyalty program for small businesses. So we connected small businesses to their users. And imagine the last time you went to a coffee shop, you could sign up for a loyalty program, get rewarded, come back over time. And the hope is that we continue to get recurring visits for the small business. Now, what the team and I discovered was we app, and we discovered that on our app that people are using to discover small businesses that they can earn rewards in near them, we discovered that users tend to visit cafes in areas that are nearby to them. So if you live in Potrero Hill, like here, you tend to just cluster around Potrero Hill for some reason. And that was unique to us because, especially being in San Francisco, we thought that people would explore more. Our original thesis was you wouldn't just stay in your area over the weekend. You try to maybe go to the Mission or go to the Embarcadero and explore a little bit more. But because we discovered these huge clusters in visits to areas near a particular person or a particular location, we realized that there might be a trend here. People continue to go to places near them. So there might be an important trend here. And the source of this data was really looking at product analytics. And so because of this trend, we decided to invest in a feature called Nearby Deals. Essentially what happened is we know that Claudia loves going to restaurants and cafes just in Potrero Hill for some reason. And therefore, in the different places in Potrero Hill, let's say it's a boba store down the street, we started showing nearby deals from the boba store to a bar next door, or to a toy shop next door, or to anything that the user would like that's more in the vicinity of the area. And that led to an uptick in usage of our app, and also an uptick in the number of stores that actually purchased to use 5 Stars. The impact was huge. Capitalizing and really understanding product analytics behind recurring usage led us to improve sales velocity, so the ability of our sales team to sell into these small businesses by 38%, which was huge for revenue. And we also experienced a 4x growth in new customers, or growth in users actually using the app to discover deals that's more nearby to them, because we truly surfaced them something that is interesting for their own behavior. So that's an example of the first signal, strong recurring usage. The second signal is fast time to first task. And this is actually something that is very recent at my current company. We launched a very exciting feature just a few months ago. And what was really exciting about this feature, as with everyone here who has launched features in the past, it's not just about launching the feature. That's not the end game. It's what you learn from launching the feature and how you can use those learnings to influence other things and to build other things that might also have similar effects or amplifying the effect of a particular feature. And so the exciting thing about this feature is we launched something called alerts that surfaces new insights, what's different, what's new about the accounts that reps are assigned to. Close Factor is a sales intelligence platform. So we have all of these exciting data about a particular account that you're assigned to as a rep. And the hope is that we can surface the right data for you so you can outbound more effectively and close deals more effectively. So with all of that data, how do you make a decision on it, right? Like you can't pop in and continue to analyze the data all the time. Imagine a world where we just surface you the exact data that you need to take action on. So we did that. And what we did was our alert system. So this is an example of our alert system on Slack. We surface actionable information on what's changed about the rep's account. And what we discovered through looking at product analytics data post-launch is that relative to some of our other features, this feature led to the fastest time to action, meaning as reps received these alerts, they immediately took action, they viewed the alert, they viewed our recommendation, and then they outbounded with their recommended contacts or their recommended accounts, which was amazing. And because of this, we learned that reps actually value receiving what's new, information on what's new, what's changed, what's different about their account, and taking action on it. And that learning allowed us to launch other features and other capabilities that ultimately 3x our customer logins. So especially during the last 2 months, right? During holiday months when usually people are out on vacation. Hopefully they're actually out on vacation and not working. But we 3x our customer logins during holiday months, leading to sustained engagement, and also grew our in-app engagement or in-platform engagement by 130%, which was super huge. And so being able to uncover in your product, what are certain investments that you're making that are leading to faster time to first task? What are the investments that are leading people to actually perform the task that you want them to perform in a faster way? And really capitalizing on the learnings from that and building features and experiences based on those learnings. Now let's go to the third signal. The third signal is a little bit more data science heavy. So it's growing behavioral clusters. This was an experience from my last role at HighSpot. One thing that we discovered through many hours of user research, I think it was pages and pages. My team would probably, if they're listening right now, they're probably smiling because it was 250 pages of user research or something. With these 250 pages of user research, we discovered that users tend to share similar trait of desire to be more data-driven. So a little bit of context about HighSpot. It's a sales enablement platform similar to Close Factor. The end user are ultimately sales reps, sales enablement leaders, the individuals that train sales teams to be more effective at selling. And so what we discovered through all of the user research from multiple months and multiple different projects, there is this desire from sales reps to be more data-driven. They want to take action on their insights and apply it in real time. And they also want to be coached and trained live, right? Because if you think about it, you're a sales rep, you're on sales calls every single day, and maybe you fail at converting the deal or winning the deal, and you realize you might be making mistakes right now at the call. And so the hope is that someone or somewhere, someone could train you or coach you live during the call to make sure that you don't make a mistake. And what we did with these 200 pages of user research was we ran an LDA model, which is a data science topic clustering model, on all of the different feedback. We combine all of the qualitative feedback into essentially a clustering model to discover what are the different clusters in user behavior that fundamentally represents their needs. So this cluster of user behavior, what actually is specific about them that makes them more likely to do a certain behavior relative to another. And because of our cluster model, we were able to understand the deep needs within our users where they do want to be coached. They do feel like they want to be able to take actions on data right away. They want to be able to share these learnings with others, and they want to be able to coach their fellow teammates. So all of these clusters revealed those behaviors. And because of that, we were able to launch a really successful LMS product that is now being used by many of our customers, and also a meetings intelligence platform. And the launch of these products led to a 18% increase in customer expansion, and also a 1.3x growth in revenue during a downturn. And that is amazing because as we know, we hear time and time again right now, it's extremely hard to grow revenue during this period of time. It's extremely hard to acquire new customers, let alone even upsell existing customers. All right, ready for the final signal? The final signal is competitive arbitrage. And essentially what this means is continuous research on competitors to understand where there are opportunities for arbitrage. What is arbitrage? It's a term borrowed from the stock market. I started my career in banking, and so I sometimes use these terminologies. But essentially what arbitrage is if there is opportunity in the market, we jump to it first. A few decades ago, there was a funny story about this. A few decades ago, there was clearly an opportunity in craft beer in the Bay Area. A few companies started creating craft beer, and everyone just wanted craft beer, so everyone started producing craft beer, and that's why we have so many different options nowadays. But competitive arbitrage in this case is really understanding right now what are the trends in the market that's budding, where we can jump on it first and differentiate ourselves as a company. And this is something that researchers can do. And this story is, again, back about 5 stars, 2 jobs ago. What we realized in 2018 was that competitors were moving towards integrations with payment services. So 5 stars fundamentally was a loyalty program for small businesses. But we realized there was an increase in the number of loyalty providers or even payment providers like Square that started building loyalty programs. And so there's a combination or a consolidation in both of those schemes. And as we noticed that happening pretty early on, we built our payments platform in-house. So to win the arbitrage game, we decided that instead of just integrating with these companies, from a selling perspective, we decided to build our payment point of sale, our payment hardware, and also mobile payments. And that was super huge because remember, this is in 2019. In 2020, COVID happened. And when COVID happened, everyone shifted to mobile payments. And so it was really a strategy or a strategic move that paid dividends down the road by staying ahead of the competition, trying to beat the competition by building something in-house, and ultimately surviving the pandemic and helping small businesses survive the pandemic because we provided this solution for them. And launching our payments system and consolidating everything, trying to capture the arbitrage opportunity in this market allowed us to reduce customer churn by 56%. We drove $500 million in yearly processing volume in just 2 years. And we had a successful acquisition in 2022 at $320 million by a point of sale company in Europe called SumUp. So what are the learnings from all of these experiences? How can you help your company achieve scalable revenue growth? Just a recap, scalable revenue, again, is the ratio of profit to the cost needed to manage the revenue. So how well are we able to actually generate profit from the cost that we have to accrue from running our business? And as a reminder, scalable revenue is our ability to continue to generate more revenue as we keep costs to a minimum. And I summarize all of the points I mentioned at the past slides on essentially how we can align our research and product practice to these revenue signals. The first is we talked a little bit about recurring usage. This is something you can get from product analytics. If you use a platform like Amplitude, which I use personally, it's extremely easy to distill this data. Now, there's different ways you can measure recurring usage depending on your product, and that's where it can get a little bit tricky. And I'm happy to continue talking with you today or even after today to see how you can best do it depending on the types of product or experiences that you work on. And really understanding recurring usage and creating a way to continue to capture it helps us reduce churn and expand value. The second is time to first task. That's also something that you measure on product analytics. It's the ability of users to perform particular actions quickly. And there are certain features that allow us to perform actions or inspire us to perform actions quicker than others. Those type of features, those type of experiences are the ones that you want to learn from and try to capitalize for future investments and features. The third is growing behavioral clusters. So this uses a combination of user research and topic modeling and data science to try to understand what are the different, essentially you're building personas. What are the different user behaviors? What are the different clusters of users that are important, that have strong effect on a particular action or a particular feature or a particular desire that you want for your product? And understanding growing behavioral clusters helps us unlock expansion value and revenue from new customer acquisitions. And finally, competitive arbitrage. This is not just doing competitive research once in a while, it's continuing to stay ahead of the game, understanding trends that are shifting in the market and figuring out how to get ahead of your competition in extracting value from the changes that are happening in the market. And that helps drive revenue from customer acquisition. And so what are the steps that we can take to actually begin applying all of this in our practice? The first is to identify the signals. I shared 4 signals, so recurring usage, time to first task, growing behavioral clusters, and competitive arbitrage. And the hope is that we start to develop a practice where we do capture these signals in real time, where we do integrate these signals, and it's like something that you check almost daily or weekly to see if something changes to influence what you decide to prioritize, what you tell your team to work on this month or this week. After identifying the signals, it's about synthesizing all of it. So I gave unique examples from different companies for each of the 4 signals. But what I often do in my work for one company or one product or one initiative or one strategy is combine all 4 inputs to influence my decision-making and to influence my strategy. So synthesizing and combining everything into a strategy. And then the third is actually applying the insights into your product strategy, right? A lot of it is what both Judd and Chriselle talked about earlier. How do we utilize all of these insights to have an influence and actually make it an integral part of the decision making of the company? And if you are able to capture all of these 4 signals and align it to your regular practice, that's how you'll actually continue to be more comfortable and practice talking the language of the business and influencing the business. And then finally, it's also important to measure success because right now you have a skin in the game in terms of driving revenue impact, right? So if you are in fact capturing all of these different signals and trying to drive revenue from the investments that you're making, it's also important to measure your impact differently, which is with this product strategy that was heavily influenced by your research, your discoveries, how much acquisition did it in fact improve? Like the 5 stars example I shared on signal number 1, did we improve the time it took for sales reps to close their deal? Did we improve churn, for example? Did we improve lifetime value of our customers? So it's really important to continue to measure the success of your work. And I know that I talk a lot about different data science methods today, combining all of these inputs, calculating effect scores, topic modeling, etc. And it might seem like it's a lot, but I am here to help. So if you'd like to talk about how you can do this better, I've actually worked on a few different initiatives to be able to help us to be able to democratize this and help us do this at scale. So feel free to email me or connect with me on LinkedIn, and I am here to help you continue to drive more scalable revenue for all of the businesses or companies that you work in. Thank you.